Good morning, everybody. It's Ben Buckner and Dan Bosse back at you in a brand new week, the 21st of July. We're moving into the last half of summer. We've got some needed rain across some of the drier areas of the Midwest on the weekend, Indiana, Illinois. We also have more threats of tariffs by the administration saying that August 1st is a hard deadline. We'll see how that all plays out. Importantly, though, the administration is also talking about freight this morning. If you remember back, we do have this potential freight tax coming on Chinese vessels up to $1.5 million a day. We'll see how that plays out as we get closer to October. But President Trump indicated that he wouldn't be heading to China until the APEC meeting, which happens on October 31st to the 2nd of November. So a little later than the trade was hoping for, because they don't think we can get a trade deal with China till the two presidents actually meet. But Ben, I'll push it back to you. We're mixed this morning. The wheat market's higher. Corn and soybeans are lower. The Russian wheat market has kind of got a short squeeze going on. Tell us a little bit what you see in the markets happening, at least here on Monday in the third weekend of July.
Yeah, I think it's kind of a little turnaround Monday, as it were. We left going into the weekend with, honestly, the season's first, meaningful weather threat in the form of heat and dryness, and how long would that last was the big question. And of course, you had 2 days closed in the market, 8 weather forecast updates, so no one wanted to be overly short Friday. And I think we've kind of started to ease concern, maybe. I mean, it's still, we're focused on the long range forecast, but it is pretty consistent. I think it's still just kind of supply. July 21st, it's, we're not probably going to score lows in the row crop markets in July, but it is also one where if there's not some meaningful threat to harvest supplies or supplies at harvest, the markets don't tend to add a lot of premium. And so I think it's just weather for the most part. The trade deals or lack thereof continue to linger in the background. But over the weekend, it was just pretty pleasant. And so, you can kind of all see this pattern shift forthcoming on July 23rd. But now with corn, I think on Sunday, USDA will peg it at something like, 52 or 55% pollinating. And so up till now, it's been pretty good. So we got some pretty nice weekend rains. That's what you see here on the left. That is a rain gauge measured precip from Friday to Sunday midnight. And it is, of course, Iowa, but also northwest Illinois, southern Illinois, and some scattered parts of Indiana seeing, more than an inch, in some places more than an inch and a half. So that's where the water was needed. That's where the water fell. And then maximum temperatures would probably all kind of concede just how pleasant it was. 70s in the upper Midwest and, low to mid 80s kind of elsewhere outside of western Kansas, where this kind of heat dome is starting to build. But yeah, so up till maybe 60% pollination for the U.S. corn crop, things will have been very nice. And I think that's part of the theme. We still have, you can kind of see and know his 5-day forecast, which again has been pretty reliable to date. You can see where this ridge sets up. So, Oklahoma, Kansas, Missouri, parts of Arkansas, everywhere else, and the climate guys that we work with have kind of highlighted that this pattern was forthcoming. You're going to have a lot of ridge riding storms, which may be pretty heavy, but it does give you a lot more water between now and the end of this week in places like North Dakota, where it's also needed, but just where it's been pretty wet so far. It kind of stays that way. So again, you can take down your yield ideas on a regional basis, but on a national basis, the big question is, we've seen these high yield forecasts from the private sector. Do you need to change those? And that's, I think, the question today. And the answer from us is, I think, maybe not. And again, we're talking about 9 to 15-day forecasts, but they've been very consistent. And so it does look like the best performing models do stay warm, hot in the plains, western Midwest. It is going to be hot in Kansas. It's going to be in the upper 90s. But then this pattern kind of eases. That ridge more or less goes away after about July 30th or 31st. And so when you kind of go through your list of weather concerns and what you're looking at every day, sort of mild, wetter August 1st onwards, and even some long-term climate research that we've seen have said August should be fairly normal temperature and precip wise. So I think that is probably what's kind of triggered today's correction. Maybe more than anything else. It's just we kind of got hints of this late last week, but it did not look like to us, at least in the principal corn belt, that this threatening heat dryness would be lasting. And that's what we're looking at this morning as well. There is also, in the background, again, it's not just U.S. Crop conditions, yield models, et cetera. That's all going to be part of the trade, but it's kind of everything else. It's how fast? What's the pace of disappearance once we do get these big crops? I just wanted to highlight that, Mato Grosso is now 77% harvested with its safrinha corn crop. And you can see here that we're pretty close to average all of a sudden. This does mirror the planting dates that we saw, very, very sluggish to start with. And then we got most of that crop in by the end of February. It's kind of a miracle there, but there's still about, 20% left to harvest it. That's about 430 million bushels or so, we think, maybe a little more. So the question to us is, the Brazilian corn market is not expensive. Today in central Mato Grosso, farm gate prices are 290 to 295 a bushel, which is pretty well aligned with the last 30 days and a year ago at harvest. But it's hard to be bullish, I think, of Brazilian crop prices. What we are going to monitor pretty closely is, does this remaining 400 million bushels, how does it impact the domestic market? Will it be overrun by supply? So I think on our list to do is going to be looking at the Brazilian cash corn market just to see, are they prepared for this record crop? And that's going to be, I think, a big issue. There's not all doom and gloom, though. I do think we've seen, the wheat market really the last month and a half or so just have a lot of bearish input thrown at it, but it hasn't done much, especially to the downside. And I think what we're looking at this week is the Russian cash wheat market going up. It's not going down. And we've kind of determined that the rate of this rally in Russia probably is some kind of short squeeze. I mean, the exporter just caught short. I wanted to show this, that Russian prices bottoming in July is pretty routine. So, how high is high for this kind of mini wheat recovery? That's a big question. But I do think the Russian market probably doesn't have a lot of downside risk. But the issue for wheat to us is that, again, if you assume August weather is normal in the central U.S., it's what can the Chicago wheat market do relative to corn, I think, is the big question. And so we have seen the last, almost decade, $1.50, $2, of course, being kind of rich. So if you're stuck at $4 corn, $3.80, $3.90, what is your upside in Chicago wheat, even if you've got kind of a firm Russian cash market? So just kind of want to be careful there. And generally, the mentality, I think, is still like picking targets, managing risk. Next 100 days, we don't see a lot of real changes in the trends that we have seen. And to your point, Dan, I think, one way or another, good or bad, we have determined this, hard deadline, or at least it's been presented as a hard deadline, August 1st for trade deals. Headlines are going to come fast and furious. China and Europe seem to be the most difficult ones to get done, kind of filling in some gaps with Indonesia and Bangladesh. Those seem to have been successful. What does that mean for ag trade? It's China, of course, is what we're after. And then Europe, too, could be a pretty big deal for select markets. But just know that we're going to see a lot of geopolitical headlines coming at us. And we talked about, the APEC meeting August 31st. We've also got Xi kind of confirming that he's meeting with European leaders as well. So there's a lot of ins and outs with geopolitics. And so I think if nothing else, we say trade policy uncertain kind of indefinitely. So that's kind of where we see it. I think it's weather for the most part for the row crops. We're turning around a little bit. Does that August weather forecast, which looks pretty good, does it stay in place? That's the question.
Yeah, but I think that's a good rundown. And that APEC meeting is October 31st. I just want to be clear on that. And then as we look at, the people are telling me EU trade deal looks to be a well a ways off. I mean, the EU farmer there is not happy with the Mercosur deal. They don't want to have a U.S. deal. And it just makes it very complicated to get an EU trade deal as I see it today. And again, I think a U.S.-China deal is way down the tracks, maybe later this year at the earliest. And so, China's going to be last. And and on top of this, I mentioned these tariffs on freight. I mean, I'm hearing that some of this discussion over whether or not you can carry U.S. goods or even international goods into the United States on a Chinese vessel is now being circulated in some of the other trade agreements. So lots of complications here, to your point, Ben, lots of unknowns. And I think it keeps the market back on its heels. The Russian rally is occurring with only 2 million metric tons of demand for the month of July. So that's what shipments look like. It's not a strong global market. It's just that the Russian farmer's not selling. And maybe the crop's a little smaller at 83.5 or 84 than people were thinking. Any closing comments, Ben?
I don't think so. No, just choppiness probably dominates. And so we just kind of got into a strategy, not chasing daily moves is the thing, but we do want to manage risk, I think, on recoveries for the farmer. That's still where we are.
Yeah, I think that's right. But I still want in my back of mind, I don't think this corn crop's going down, to your point. I think it's a 184 to 191 kind of yield. So how big is big will be the question of how far we drop heading into the end of summer, into the harvest. So thank you, everyone. I wish you a good day, and we'll look forward to the remainder of the week. Ben and I will be back, but this QR code here will get you a month of ag resource for $1. Take advantage of it. We'll be back soon. Be well, everybody. Good trading on Monday.
Bye-bye.